Hello everybody and welcome to your executive summary. This is John Seville from Acorn. Let's get started. So, we talked yesterday about having a dead cat bounce up to that 2030, 2040 area, and that's exactly what we had. If we go back to the 1 hour chart, you can see today we bounced off that level, taking us up to around that 2030 area, and then straight back down. So coming into the close, where that brought us to was that 38.2 Fibonacci level that we spoke about last night, well, this morning. So 38.2, which was that 1990 area that we've just now touched on. So we've made a new low, lower high, and closed there in the bottom half of the range. So we could have another little bounce off this area, but so far the direction is still decidedly down for the time being until we take out that high of today's candle. And the interesting thing about that is you can see that although we are at higher levels than the December low, we are actually creating lower lows on the money flow on a relative basis. So that's telling us that the smart money is, again, potentially getting out here. We've seen a very big break in areas such as the banking sector. In fact, if you look at the banking sector spider as compared to the S&P 500, you'll notice this. You'll see that the S&P has not yet broken its low, but if we go to KBE, which is the spider S&P Bank ETF, we've actually broken new lows. But again, you can see we are approaching some support levels, so it'll be interesting to see tomorrow whether we actually break through that or have a little bit of a tiny recovery bounce. Either way, I was looking at some decent short setups. One of the ones I found was Micron. Now, semiconductors, of course, have had a huge rally and are potentially acting a little bit toppy. In fact, if we look at MU, we can see the money flows come right out of the stock, and we're actually completing a head and shoulders pattern here. So if we were to follow the traditional head and shoulders rules, you can see we have a nice symmetrical left shoulder, a beautiful head here in the middle, also symmetrical, and then a symmetrical right shoulder, which is about as picture perfect as you get. Now, drawing on the parallel channel by connecting through the bottoms and the tops, you can see we find our shoulder and neckline, and what that dictates is that the difference between the distance from the neckline to the head is where we're looking at the drop of the breakthrough to occur. So this brings us down to a level that's about there, which is where we gapped up from, also a resistance point, which actually works quite nicely, and that gives us our target. So we're looking at 29.83, 29.85, and after a breach of this support, the low here was 32.63. So if we get a breach of 32.57, we're looking at basically a drop down to down to 29.83. Okay, so that's what I'm looking at. I don't own this yet in terms of short, but I am looking at taking a position in this tomorrow. Now, the other one worth mentioning is American Express. Now, they report next week. One of the 50 companies reporting earnings next week, and you can see they've had a nice breakdown and on expanding range candles. Now, I don't want to chase this, so what I'm looking for is a rally back up to this area here. And that would bring us up to basically the bottom of this candle. So I'm looking for trying to snag this somewhere between kind of that $89.80 and $90.50, kind of somewhere in that zone. So hopefully it gets that high, and then I'm looking for a short down from there. And so American Express, again, diverging money flow. Even though it went higher highs, the money flow started coming out the bottom. So that is the other one on my short list for tomorrow. So I hope that helps, and happy trading.